Good morning, everybody. I'm Kate Hardig from the Department of Insurance, Securities, and Banking. I am the Public Information Officer for the agency. We're so excited to have you here for our second Coffee in Capital. Actually, the first time we had this event, it was pouring down rain. Of course, today it's 100 degrees. So we're really glad you made it out. And for those folks who joined us the first time, we're glad you're here again. To officially start our program, I'm going to have our commissioner of our agency, Stephen Taylor, come give you an official welcome to the program. But if you need anything, please grab myself or one of our staff in the back. We're so glad that you are here. So please help me welcome Stephen Taylor.
Well, thank you very much, Kate, and good morning, everyone. So good to see everybody here, and sorry about the heat outside, but it's a little bit cooler than the meeting I had last Friday, which is really actually about 100 degrees. But again, good morning, everyone. Welcome to Coffee and Capital, our second installment. Again, my name is Stephen Taylor. I'm the Commissioner for the Department of Insurance, Securities, and Banking. And on behalf of the Bowser Administration and my agency, we welcome you and are so pleased that you're able to come out and join us this morning. I also want to give special thanks to our fellow agency, the Department of Housing and Community Development, for hosting us here today in this fantastic facility. Excuse me, and of course out here in wonderful Ward 8. So really happy to be here. Really excited to be here for the second round of Coffee and Capital. And I think some of you were here for the first installment. So it was action and information packed, and today will be the same. We will continue these type of events all throughout the district in support of our small businesses. I want to start just for a minute and give a little background of our agency for those who may not be familiar with our agency, the Department of Insurance, Securities, and Banking. We actually serve as the financial regulator for the District of Columbia. As a regulator, we oversee your insurance company, we also oversee your bank, and in some cases, we actually might have licensed the mortgage broker who might have financed your home. In brief, if you're conducting financial services in the district, we are likely to have a role in overseeing those transactions. We make sure that the companies play fair and follow all the rules, and for those who don't, we go out and catch the bad guys who try to prey on and rip off our residents. That's not good. In addition to our regulatory functions, we also, community engagement as well as economic development are priorities for our agency. We know that small businesses are significant drivers of economic opportunity, employment, and innovation in the district. However, we also know that some of you in the past may have faced barriers when you try to start or expand your business, and sometimes heard lots of no's along the way. Is that right? But good news today. You're going to hear about some programs today that are intended to break some of those barriers down. We are here to connect you with a private and public sources of capital that may not have been available to you previously. I encourage you to ask questions all throughout the program and contact us any time. Also, there will be plenty of time after the program today to do networking and meet some of the lenders and financiers that are here today, and again, our sister agencies. And speaking of sister agencies, I'd like to thank them for being here and also for all the work that they do in supporting small business. And one of them is the Department of Small and Local Business Development, and the other one is the Department of Housing and Community Development. I also want to recognize the financial institutions and lenders who are here and also participate in our programs. Again, thank you for being here, and that's Industrial Bank, First National Bank, United Bank, I saw City First, and also Washington Area Community Investment Fund, also known as WACIF. Again, thank you for being here today and being part of our successful programs. But before we get to the presentations, I'd like to give you a little preview of our program today. First, you're going to hear from Christopher Weaver. He'll be talking about and showcasing what we are branding DC Biz Cap, which is the 3 programs that provide financing options for small businesses in the district. Followed by him, you're going to hear from Tony Miles, who will discuss crowdfunding options for small businesses. And you'll also hear from Julie Davis, our special guest from the United States Securities and Exchange Commission, and she will give you a briefing on some of the federal rules for crowdfunding. Finally, and you're in for a wonderful treat, you're going to hear from 3 of the district's small businesses who have used our programs. They have graciously agreed to share their financing stories about our programs with you. And if it was like last time, you're gonna hear some great stuff. So with that, I'm gonna ask Christopher Weaver, our Associate Commissioner for Banking, to come up and kick off our program. Christopher, welcome. Thank you again for coming out.
Morning, everyone. So I'm Christopher Weaver. I'm the Associate Commissioner for Banking with the Department of Insurance and Security and Banking. We are first and foremost a regulatory agency. So my bureau is responsible for the regulation of both banks, depository and non-depository financial institutions in the district. But we also have a second part to our mission that the Commissioner alluded to, which is an economic development mission. And we set out to try to expand and improve financial services for district residents. So the programs we're going to talk about today relate to the sort of the second part of our mission, trying to make capital more accessible to small businesses. Maybe 4 or 5 years ago, when we were at the height of the recession, we were trying to figure out a way to get more capital back out to small businesses since a lot of the lenders had pulled back on credit. And we were experiencing a credit crunch. We wanted to make sure that our small businesses still had access to capital to either start or expand their small businesses. So we started what we call BizCap now, which is 3 separate programs to try to enhance and make more credit accessible to small businesses. That program was funded by the U.S. Treasury Department, which is an initiative called the State Small Business Credit Initiative. The president took about $1.5 billion and spread it out across the country, and the district received $13.2 million. So that was the seed that allowed us to fund the 3 programs that we're going to talk about today. So when we were structuring these programs, we started out with sort of the 5 C's of credit, which all commercial lenders will look at when they're trying to make a decision on whether or not to make a loan to a small business. But I try to simplify those 4 credits down to really 2 separate things. How will you pay the loan back, and what's the probability of repayment? And so each of those things, whether you're talking about capacity or collateral or capital, character, or conditions, fall into one of those 2 big buckets. So when we structured our programs, we tried to figure out how we can make a small business come closer to meeting those underwriting criteria for the commercial lenders that are participating with us. So we have 2 separate programs. We have a collateral support program and a loan participation program. These are the 2 programs that deal specifically with commercial lenders. We also have a 3rd program, which I'll talk about last, which is an innovation finance program, and that program works with sort of non-traditional lenders and venture capital funds. So the collateral support program, what is it? It will allow us to put up to a 50% cash collateral deposit in a financial institution and pledge that on behalf of the borrower that's looking to get a loan. We can do a contribution that goes up to $1 million. There are fees that are associated with that. Typically, it's only 1%. And it does require the business owner to give a personal guarantee. So the district is taking its money and putting it at risk, and we're asking the business owner to give a personal guarantee to make sure that they still have some skin in the game in case the bank has to draw upon the funds that we've deposited, then they still have some liability to the district government. And of course, all the funds must be used within the District of Columbia. The eligibility for the borrower has to be a district-based business and subject to tax in the District of Columbia. And we gauge it being a district-based business by saying at least 75% of their employees must work from the office in the District of Columbia. And they have to have fewer than 750 employees. That's the Treasury definition of a small business. And in exchange for us providing this collateral assistance to the business, as long as our funds are in the deal, at least 25% of their employees have to be district residents. Because at the end of the day, this program is an economic development program, and it's really 3 things that we're trying to advance by putting our capital at risk. We're after jobs, location, and innovation. And those things, you'll hear us pounding that throughout our 3 programs, but the jobs is the jobs component on every single one of our programs. Location, there are certain incentives that we offer if you put a business either on one of our Great Street corridors or in a census tract where the poverty rate exceeds 20%. And then innovation, historically the district has been sort of ground zero for government contracting, and we're trying to diversify our tax base. So any innovative ideas in mostly technology companies that you don't traditionally think of when you think of the District of Columbia, we want to try to push more dollars into those companies to diversify the district's tax base. Loan participation, similar to the collateral support program, we can do up to 50%. But with this program, what we can do is we can buy half of the loan, and then there's several things that we can do with our share of the loan depending on how many of those economic development goals I mentioned earlier that are met. We can subsidize our share. And so if you have a bank that's offering a 6% interest rate and we subsidize our rate to 1%, you'll get a blended rate of 3.5%, and you come in below the market, and that may make the debt service payment for the business a little bit more affordable. The bank continues to manage the relationship with all of the programs, but we do partner with them to make these transactions happen. Eligibility for loan participation is identical to that of the collateral support program. Again, still have to have jobs. You still have to be a district-based business subject to tax in the District of Columbia. Again, I mentioned this earlier that we can do interest subsidy or subordination, and that just depends on how many of these economic development goals are being met, but we're after jobs, location, and innovation. Eligible lenders for these two programs: insured depository institutions, so any FDIC insured institution, it can be a potential partner. Currently we have 13 different financial institutions that are partnered with us. And we have a CDFI as well that's partnered with us. And then credit unions are also eligible to participate in the program. So the last program that I mentioned is our Innovation Finance Program. And the Innovation Finance Program, unlike with your traditional commercial lenders that are looking at the 5 C's of credit, these are institutional investors that may be interested in investing in the little earlier stage companies that commercial lenders may not be interested in making loans to. So these can be truly startup companies. And we partner with both angel investors and institutional investors to try to make these transactions happen. But the traditional thing that an equity investor will look at is people, process, and product. They're a lot more focused on the idea and the capacity to carry that idea out than they are the sort of the financials of the business, since most of them will be pre-revenue. So there are two sets of types of models that we've seen of business that we're willing to fund. There's the traditional venture capital where it's high risk, high reward. And then we're also, because we are still a government agency, we're not just swinging for the fences on high risk, high reward on every deal. We'll also take something historically people would consider a mom and pop shop, but moderate risk, moderate reward business as well too, as long as there has some sort of social or economic impact that goes along with it. So innovation finance, it's a co-investment. So we invest alongside of the venture capital funds and the angel investors. We can do up to 50% of the total investment amount. Our cap is $500,000. And so if it's a startup business that would need $1 million in capital, we could do up to half of that. In some cases, people are raising much more than that, but we may be able to top off their investment. Or sometimes we may be one of the early investors that will allow them to go out and facilitate raising additional capital. So the programs to date, we've put out about $17 million in loans, and that has been supported by about $7 million in collateral support. The loans have ranged from $25,000 up to $2 million. We've estimated to have created or retained about 267 jobs, and that was as of the end of the last fiscal year. We've helped businesses across 6 wards, but our goal is to try to make sure that we get capital out to all 8 wards of the city. And so that's one of the big pushes and the reason why we're over here in Ward 8. We want to try to make sure we're getting more investment capital into some of our communities that have historically not had access to capital. And the majority of our loans have also been to women and minority-owned businesses, and that's something that we're really proud of as well, too. So with that, I will turn it over to my colleague, Mr. Tony Miles, who's going to talk about crowdfunding.
Thank you, and good morning, everyone. And again, glad you all are here. And we are here. This department has these 2 missions of trying to keep a fair playing field, and second, to encourage and support businesses that want to grow and start and make things happen in the district. So we're glad you're here. And as Steve said, please feel free to stop us and ask questions and seek information. And if we don't have it, we'll do our best to get it for you. And I'm happy that our colleague from the SEC is here. I'll say more about her when we get to that point in the slides. But the other the types of support that Chris discussed involve a very active role in the department actually has money that it puts into these businesses. Our program involves going to the public for investment, either debt or equity, and it involves people coming to developing first an analysis. What do they need? What are they going to do with it? Investors are very much interested in the 5 C's. They may use different terminology, but it's the same concept. They want to make sure that they're going to make money if it's an equity investment, that you're going to be able to pay them. And if it's debt, they want to even more so. That's a form of credit, so the same kind of considerations will apply. So as part of the fallout from the crash of 08, 09, there was a lot of interest in having the government make public offerings more doable, less restrictive. And so Congress passed something called the Jobs Act in 2012, and it included a number of provisions for how you could use the internet to raise money. And that is what we got into with crowdfunding. And as you can see, how many of you have heard of crowdfunding? Okay, great. Well, then I don't need to talk a lot about this. But the single common thread is that you use the internet to attract money. And the money may be in the form of a pure donation. Somebody has a great voice, you want to enable them to make a DVD, you send a contribution and wish them well. Some people have even gotten money for college that way. And that's donation crowdfunding. The second is reward crowdfunding, and it's similar to a donation in that you're not getting anything in the way of a piece of the action, but you are going to get a particular thank you from the company that you support, either in the form of, if it's, again, that great musician, you'll get the DVD. If it is a food service outfit, you may even get a sandwich. So it's that kind of thing that will help people to raise money, again, without going through meeting the security definition in federal and state law, so that they have to jump through all the hoops that we set up to protect investors. So, next slide, please. When the Jobs Act came into being, a number of states and the district looked at what we could do to sort of complement what the Jobs Act provided that the SEC would do. And we took advantage, including the district, of a provision in the federal securities laws that exempts from SEC regulation intra-state offerings. And for this purpose, the district is a state. So what that means is that if a company offering meets 3 criteria, that the company is established legally in the location, that its principal business location is there, and that the offering is limited only to residents of that jurisdiction, they can make the offering without having to go to the SEC. It's a form of exemption. So we took that provision and developed a program that we have called it different things, but we're now calling it securities crowdfunding, to make sure people understand it's not donation or rewards crowdfunding. And under that, people have opportunities to raise money from the public. And we have an exemption from our own securities registration provisions, but it's not free. You have to pay a fee, and you have to provide information that is yours to provide, that will let investors know what it is they're getting. Also, you have to have a good record. We don't want to make this a license to steal. And there are limits on what people can invest, how much a person can put in and how much can be raised, depending on the quality of the information that they can make available to investors. So $2 million if you have audited financials, $1 million if you have had a CPA look at the financials and verify them but not give an audited opinion, and $500,000 if the financial information is not blessed by a CPA, but you verify it. The officers of the company do that by their personal signature and representation. For investors, if you have income of $100,000 or less, the limit is $10,000. If you have income below $200,000, the limit is $25,000, and if it's in excess of $200,000, you are considered essentially comparable to an SEC accredited investor, and there's no limit on the amount that you can put in, subject to the overall limit on the offering. And that's basically the structure of the program. The link is at the DISB website, and it's a link to the regulation where there's a reference to that, and also to the guidance that we have. And we'll be happy to take any questions you may have. And with that, I want to turn it over to Julie, who will give you the interstate full SEC exempt offering category that they call crowdfunding as well. Thank you.
Good morning. Thank you, and thank you to DISB for having the SEC here today. We're happy to talk about crowdfunding and other ways to raise capital at any time. So I have to start with a standard disclaimer that SEC employees have to give always, which is the views I express today are my own and do not necessarily reflect the views of the Commission or any of my colleagues on the staff of the Commission. So that's out of the way. As Tony talked about, if you are interested in crowdfunding on an interstate perspective, meaning you take money from investors in multiple states, not just the district, but maybe Virginia, Maryland, and all the other states and territories, then perhaps regulation crowdfunding would be something you'd be interested in. This was something that, as Tony mentioned, there was the Jobs Act of 2012 passed by Congress, and the SEC was directed to create some new exemptions from registration. So just one thing to keep in mind is that anytime you or your business is going to offer securities, you either need to register them with the SEC, such as an IPO, which isn't really probably what most people in this room are interested in doing for your business, maybe at some point down the road. Or if you're not going to register, then you need an exemption from registration. And there's a lot of different exemptions. The Jobs Act created some new exemptions. Crowdfunding is one of those. And there are specific rules for it, and those rules just went into effect in May, and we're very excited that they're now in place and being utilized. So we're 2 months into the program, and so far we've had 60 companies register an offering statement with the SEC and put them up on their intermediaries. And we've seen $4.8 million in commitments, investment commitments. Only 2 companies have actually closed on that. Others have met their targets. So it's up and running now, and I think that's good news, and we're excited to see it move forward. So there's a couple things just I'll kind of walk quickly through the way it would work just generally, and happy to answer any questions that folks may have. But your company would work with an registered intermediary, so it has to be done over the web, and it has to be done through one of these intermediaries that's registered with the SEC. It can be a broker-dealer or a funding portal. And then on that intermediary and filed with the SEC is certain disclosure about the company so that investors can know what it is they're investing in. And the information has to be up for at least 21 days, although a lot of the periods are much longer than that. Some are saying, we want to raise X amount of dollars within a year or whatever amount of time they want to have it open. And so the offering is up with all the information. There are limits on how much a company can raise. It's $1 million. And there is a limit on how much investors can invest that's based on that investor's income and net worth. And all the details are on our website. I won't bore you with any of that. One thing to keep in mind, as Tony was talking about, that whether you or not you have a security is always a question. Whether you need to use regulation crowdfunding and securities-based crowdfunding, or is this something you can do on Kickstarter or Indiegogo that isn't a securities-based crowdfunding? And everyone knows stocks and bonds are securities. There's a long list of things in the statute that are securities. One of those things is an investment contract, which the courts have defined quite broadly. I will not go into all the long case history of what is a security, but just keep in mind that kind of the seminal U.S. Supreme Court case was interest in an orange grove was a security. So that's one thing, if you think your company wants to issue securities, you may want to talk with a lawyer to see is what you want to do a security and whether you want it to be a security or not, and you go from there. So anyway, I'm happy to take questions. Are we doing questions later, or however it works out? Happy to answer.
We will have opportunity for questions later, but if folks have questions now, we are happy to take them. But we will have an opportunity for questions later. I don't know if anyone has a question right now. Okay. Hang on one second.
Not necessarily pertaining to your presentation, but you did it very good. Not pertaining to your situation, but another gentleman from the back mentioned, I guess, somehow with these loans that they give out, his office provides half. Is that how the loans get backed? Is that what incentivizes banks to do that? Thanks, Chris.
Okay, so there's two programs where we do not make loans directly to businesses. So in both cases, we're providing enhancements to banks to try to encourage them to make the loans. So it can be in the form of collateral support. So 50% of the loan we would deposit in the bank and pledge that on behalf of the borrower as collateral. And the other is where we buy half of the loan from the bank. And so when we buy half of the loan from the bank, then there's those two things that I mentioned earlier that we could do, where we can subordinate our share of the loan to the bank, meaning if the loan goes bad, the first dollar loss would be ours. And then we can also subsidize our interest rate. So our half of the loan will be a lot less expensive than the bank's half of the loan. So the blended rate will be below the market. So yes, in both cases, we're encouraging the bank to make the loan by doing a 50% participation, either as collateral or a purchase.
And follow-up questions. So I saw on the slide it mentioned that you all have been successful in 6 wards. Which wards have not been successful, and why?
You're really gonna put me on the spot here. So
Something to do over here out of that 13.1 million. I want to make sure that me living over here, I'll get my fair share.
So we absolutely are trying to make sure we get in our wards, but we have not done businesses in Ward 7 and 8 yet. We've had business owners that are from those wards that are in other places. Part of it is a function of the commercial corridors over here aren't as abundant as there are in other areas of the city. There's a few commercial corridors, but also we're just trying to get the word out to more people to make a push. But we definitely, so if you have a business, we'd definitely be interested in talking to you about how we can help you get access to capital.
All right. Oh.
Actually, building on his questions, actually 2 more questions.
Okay, very nice, okay.
How do you apply? So do you go to the bank to start the application and let them know that you want to be a part of this program?
All right. So the application process does begin with the bank. And so sometimes the borrower will go into the bank, let them know that they're aware of the program, and we have a list of all our participating lenders on the table back there. It can start that way. Other times, people will come directly to me or come directly to our office, and we can have a conversation with them about whether or not we think that they're ready to approach a financial institution. Sometimes people need some sort of technical assistance first before they approach a lender. So we work with our partner DSLBD to try to find someone that may help them in that respect. And then we may send it out to all of our participating lenders to give them a picture of what's being offered, and then those banks may then compete for that business. So it can happen both ways, but traditionally it starts with the institution if the person's ready to approach them.
The district is the healthiest state in open fitness and
So our program does not have any particular sectors, so there's no limitation, so we left it wide open. We received $13.2 million to start this. It's really a pilot, so we're trying to see where the demand is. So we didn't exclude any sectors. So if someone has, we funded a yoga studio, we funded some things that are in health and fitness. So they're not prohibited, but it's not limited to that.
and there's no additional programs specifically for that.
Not that I'm aware of.
Okay, let's see if this mic works. Okay, thank you for your patience.
I do have a question. It seems like you're on the spot right now. But I'm a nonprofit. We have a social entrepreneurship component where we have businesses that actually support our programs. We also have a workforce development and also a wellness component where we're looking to have businesses to bring on district residents. Now, the District of Columbia was one of the first, as far as that sector, to recognize the hybrid between nonprofit and for-profit. How does that reflect in the programs that you have here? Is it the same where you're looking at it? Because what I'm getting is, because it's something that's very new from both sectors, it's new. So it's ground zero and everyone is, well, I'm interested in that, but I've got to find out more about that. So how, as the programs that you have, how are you addressing that? Because we don't pay taxes. And
So the good news and so when we first started the program out, nonprofits were not eligible borrowers. In the last year, we amended the rules. So whether you're a hybrid or a pure nonprofit or a pure for-profit, they're all eligible. So we have already done lines of credit and loans for nonprofits, pure nonprofits. And so as long as they're based in the district, that's subject to tax doesn't apply to them. We are making sure that the services they're delivering, the majority of that is being delivered to district residents. So that's something that we would look into. But so nonprofits are eligible.
I think Mike was going to speak to
The nonprofit. Hi, I'm Mike McManus. I'm the Assistant Director of the Corporation Finance Division at DISB. Directly to your question about nonprofits, we do, in our security laws, have a provision that allows nonprofits to raise cash, to raise funds, and they do not have to go through the onerous and extensive registration process. It's a $100 filing fee. We ask for certain amounts of information from you guys, and but I wanted you to know that it's available, and if you want more information, I'll be glad to provide it.
Thank you.
Okay.
Thank you, guys. All right, and if you have more questions, we're going to have time after our next part of the program. But I'm going to shift us into kind of the last part of our official program, which is hearing from businesses like you. And actually, I'd like to know how many folks in the room have existing businesses? Existing businesses? All right, how many of you guys are looking for funding? Just obviously why you're here. Okay, awesome. I just wanted to sense for sort of who is in the room. But there's really no one better to talk about these programs than the businesses themselves who have used the programs. And as Chris said, there's been 17 million in loans that have already happened. So we want to talk a little bit about how some of these district businesses have used our programs. And we have two businesses with us who are going to share their financing stories. So I'm going to ask both of them to come up and sort of sit up here if that's okay, because I know you're going to have questions for them. So I'm going to get them ready. So we have Yael Krigman from Baked by Yael, who's here, and we also have JD Elkert from Solar Solution, who are going to give their stories to us. So who in here knows what a cake pop is? Most people? All right, well, Baked by Yael has the best cake pops in DC for sure, and maybe even nationwide, because I've had them and they are delicious. So Yael Krigman is the owner of Baked by Yael, which is a Woodley Park business, and if you've been to the zoo lately, right at the entrance, her business is right across the street, and she sells delicious cake pops and other baked goods. Kids love them. corporate folks love them. Her catering clients love them. And she is actually one of the first businesses to use our programs. And she has a great story about how she got started and how she went from something else to becoming a cake pop baker. So, Yael, I'm going to ask you to come up here and give us your story. Thank you.
Well, thanks for giving my pitch for me. As Kate mentioned, I'm the owner of Baked by Yael. I'm also a recovering attorney. I worked at a law firm for 8 years, and I started my business. I actually did not really bake that much. I just started baking actually mostly as a stress reliever when I was in law school. So anybody who's been to any type of school knows that you're always trying to find a way to procrastinate. And so I started baking. And what I realized when I went back to my firm, which I ended up being at for 8 years, I realized that there was one job that I was working at because I was making a lot of money, and there was one job I was working at because I felt very passionately about it, and I really enjoyed it. And I started to realize as the months went by that maybe I could make money off of that as well, and I could combine my passion and my livelihood. So I overlapped for a little over a year, and then I ultimately decided that I was going to take the plunge. I was going to leave my job, and I was going to try to make this work, because at one point, I wanted to be smart about it, and I didn't want to leave until I knew that the business was financially viable. But at the same time, you can only work 2 full-time jobs for so long until you start to give out. So I just decided I'm going to see what I can do and try to make it work. So I left my job, and I decided I was baking out of a basement in a synagogue. And I decided that I wanted to take the next step and open up a storefront. I have no formal business experience. I have no formal baking experience. But people liked my products, and so that's what I decided to do. And the first thing I ended up doing, which I'm really glad about, is I wrote a business plan. And I didn't really think that I needed one, and I quickly realized that that was not the case, that nobody was going to take me seriously unless I had a business plan. So I worked on that for many months, and it helped me flesh out my ideas. It helped me figure out what would work and what wouldn't work, what I could make money off of and what I couldn't make money off of, and that was sort of my starting point. In 2013, I launched a Kickstarter campaign, and that was a full-time job for the 31 days that I launched it. We raised over $74,000, and the way I did it, and that's no small feat for a bakery. A lot of times, a lot of these companies that make a lot of the money are the tech companies. And so to sell baked goods, to pre-sell, essentially what I did was I pre-sold my bakery items. So I said to people, a lot of people who I didn't know, I said, you love cake pops, you either love my cake pops or you think you would love my cake pops, and when I open my store, you all know that you're gonna come and buy them. But I can't open the store unless I have the financing. So pre-order your cake pops now in 2013, and then when I open my store, you can come and collect them. So I had 669 people who did that, and the vast majority of them I didn't know at all. So I will say, in addition to I launched the campaign primarily for the financial benefit. What I realized is that by the time you're finished fulfilling all the rewards, it wasn't really a moneymaker, but it was really great for marketing. I got profiled on CNN, on Voice of America, a lot of print press, so I got a lot of publicity out of it. So I would highly recommend crowdfunding, if not for the financial gain, then for the marketing gain. But it's not for everybody, and it was very, very difficult and time-consuming and stressful. So once, which I was trying to avoid. So once I got my $74,000, and then I, at that point, was trying to find a loan and a space. And that was also really difficult, because the landlords want you to have your financing in place before they discuss anything with you. But the banks want you to have your location in place before they discuss financing with you. And my first bank that I went to, because everybody said you should go to the bank that you've been with, which makes sense, right? They know you, they've been supporting you and following you. And they had said all along that they were going to help me with my store. And they loved the products, and they loved me, and they loved the concept. So I finally sat down with them. I said, okay, I launched this Kickstarter campaign. I have almost $75,000 in addition to other money that I've made. So let's get this done. And they said, okay, great. And we were going to do an SBA loan. They said, great. So we just need you to collateralize 80% of the loan. And I said, well, I mean, if I had that kind of cash, I would just buy the store myself. So it was extremely disappointing and frustrating. And I said, well, obviously I don't have that kind of money or I wouldn't be here asking for a loan. I thought that the point of SBA was to sort of help people like me who didn't have the funding and the cash to collateralize a loan. So that didn't work. So I went to another bank. They weren't able to help me. They introduced me to a third bank who loved me and wanted to do a deal and wanted to do an SBA deal, and everything was great, and we did most of the paperwork, and then it was just basically a promise, a letter of intent, and then they say, when you find your store, then we're gonna, we'll finalize paperwork and get you your money. So I got to almost literally the 11th hour after finalizing the lease, and I was about to sign, and all I had to do was finish the paperwork with the bank, and they pulled out. They got cold feet. They had some internal issues. They basically got scared because they considered me more of a restaurant. I'm not sure exactly what happened, but they didn't want to take the chance. Now, it was also really frustrating because at that point, I had all of these Kickstarter backers. I had negotiated a lease with a landlord. I was ready to go, and they were back, and now this other bank was backing out. So that brought me to Revere Bank. And they were phenomenal. And I will just say, through all of this, I kept my contacts. So all of these people who were helping me from one bank to the next were people who I had been introduced to by somebody else. So even if one bank rejects you, don't be too discouraged, because they might introduce you to another bank who can help you. So don't burn any bridges. So I got to Revere Bank, and at the same time, we had just learned about the DISB cash collateral program, which I really thought was too good to be true. But it ended up not being too good to be true. And my bank loved it. This was the first time that they had participated in this program. So they wanted to help me. The loan officer had been at the previous bank, so she knew me, she knew my business plan. They loved the concept. Again, they loved the concept, they loved the cake pops, they loved the fact that I was a lawyer. They felt great about everything, but who wants to take a risk on something like this, on a bakery? So the cash collateral program basically legitimized me. So I didn't have to then come up with the cash collateral, because it kind of makes sense from the bank's perspective, right? I mean, they don't want to take a risk on any type of business, let alone a bakery, unless they know that it's going to work. And of course, they can't possibly know it's going to work because we were DC's first cake poppery. So there was no way to know whether we were going to work. So the great part of the cash collateral program is that they actually backed half of the loan amount. So and I'm not going to default on my loan, but if I were to default on my loan, then DISB basically moved half of the loan amount into a bank, which for the bank, they don't have to sell my condo, they don't have to sell any assets that I may, or in this case, may not have. They have this money sitting there. And so that's very, very attractive to a bank. And it really kind of puts you in a different level than other small business owners. So things went very quickly after that. It's been wonderful. I mean, there is a small fee to participate, but for a business like mine, I would not have been able to open my store without this. And so this support was absolutely critical, and it came at a really good time, and it's just been wonderful. So thank you.
Thank you so much. Thank you, Yal, for sharing your story. We have Solar Solution here. We also have another business, First Choice Masonry. So I'm going to ask Corey to come up as well and sit with us. All right. So everyone knows solar panels and cleaning up the environment is a main priority for lots of folks, and especially here in the district area and also in Maryland, Virginia. JD Elkert is here, and he works with Solar Solution, which is a DC-based business that's installing solar panels all over the district and the area. So we're very happy to have JD here as well to tell us a little bit about how the business he works for also used our financing programs.
Hello, everyone. Thanks for having me. JD Elkert. I'm Executive Director at Solar Solution. Just like Kay said, we're a solar installation company. We're based right here in DC. Most of the projects that we install on are residential, probably about 90%. The other 10% are commercial, churches, condo buildings, museums, and so forth. So we started off the business in 2009, so we've been in business for about 7 years right now. Year after year, up until about 2013, I'd probably say the growth was about 25 to 30%. As incentives from DC started kicking in with the rebates to go solar, more awareness about solar started to kick in, more people wanted solar. We had about 12 employees at the time, limited cash flow, we had one private owner. no investors whatsoever, so that did put us in a financial crush. 2013, we were in debt with our vendors. There was high demand for solar, and it was either turning down the businesses or trying to get a loan. We tried to get a loan. It was new. Solar was new. Bankers didn't understand. How are you going to get money from this? Is the solar market, is it reliable? There was rumors of solar companies going under, and you guys probably heard about the bailout of that solar company that didn't work out. So it was very skeptic at the time. Lenders did not want to work with us, so it was either turning down the business or finding an investor that wanted a portion of equity of our company, something that we did not want to do. So then we found out about DCCSP, which is the DC Collateral Support Program. What that did was it provided us, we were qualified for the loan, but we just did not have enough collateral support for that loan for it to go through. So DCCSP actually provided us with that collateral, made that loan possible. We got our first loan in 2014, which helped us pay off our vendors. We hired 4 new staff members to meet the installation, to hire some sales reps to talk to more people, to get more solar on board. We grew from 25% the year before to almost 60% in 2014. And that money also helped us advance even further and expand even further in 2015. We grew 80% in 2015, adding an additional 2 new installation crews, an additional engineer, and 3 more sales reps. So where we're at today is we've installed close to about 60% of all the solar PV systems in the district. And that just would not have been possible without that loan, without the DCCP's support. Mainly the way that we work as a solar company is we either offer the cash option, a person can buy the system outright. Of course, the money at that point can just pay for the supplies that we're buying. But also as leases become more popular, where customers really don't pay anything out of pocket to have a system installed, and then they would basically pay a lower payment for their electricity that the solar panels are producing. Our company is basically buying those systems and putting them on the rooftop. So it takes us several years for us to get that money back. And in order to compete in the market, we had to continue doing those programs, and that's why the loan was very important for us. So that's pretty much our success story, and we're very grateful. And I love that we're holding this kind of setting here to educate a lot more people about that program, because without it, we had no idea that existed, and it was just it was very grateful. We're all very grateful to have it. So great, thank you.
Thank you so much, JD. Also really excited because we have Corey Jones here from First Choice Masonry. I don't think we could get any more diverse businesses, from cake pops to solar panels to residential and commercial masonry. So certainly a diversity of businesses. So we're really excited to have Corey Jones here. I'm going to ask him to come up and also share his story. Thank you for being here.
I'm Corey Jones. I'm the owner of First Choice Masonry. Third generation masonry contractor, grandfather, father, uncle. I came about the program through United Bank with Jeff Banks. At the time, my current bank we had kind of reached the ceiling with them as far as our growth. We were looking to expand, hire new employees, because we were taking on larger contracts. So when I ran into Jeff was telling me about DISB, and he said, "Man, we got a great program over at the bank." So once he began to tell me about the program, I began to talk to my team about it, and they said, "Well, we've been with our bank for so long, and people kind of hate to switch." But when we switched over with Jeff, we kind of grew overnight. I found our company at a time where we wanted to go after larger contracts, but we were stagnant. But with this program, we were able to bid on larger contracts, and we've since hired 20 new DC residents, Since we've been in the program since 2014, late 2014, we've grown our market 30%. We do things like rec center schools around the district. One of our latest projects was on Ridge Road. We built the new rec center over there. We did the masonry and the concrete on that project. And we've also, when they build a new soccer stadium, we just got an invitation to bid on that. So we've been able to grow our business through this program. And I just wanted to let y'all know it's real, it can happen to you. Thank you.
Thank you, Corey, so much. Really appreciate it. So we have our all-star panel up here to take your questions. And I have some of my fellow staff who are floating around. If you would not mind waiting for the mic so we can capture your questions and everyone can hear it, that would be wonderful. So please raise your hands.
So we've sort of heard three different scenarios and stories as to how they were able to benefit. Now, in this situation here, he actually had to end up, thank you, changing his own bank to actually get that benefit. Is that what you all had to do also?
So for for the first time in 2014, when we got our first loan, it was through Industrial Bank, and they approved us for about $600,000 in the first loan. We were very successful with that. We paid it off within about 1.5 to 2 years,
Exactly.
and then we got a second loan through a different bank, through First National, right? Where we got $3 million, and that just kind of came through currently right now.
In the same DISB
as
program?
part of the same program. Yes, correct.
Okay.
Yeah, I
You gotta
also.
learn this.
Sorry.
No.
Oh, I also switched banks, and like I said, I was very, very loyal to my bank. But once I realized they weren't going to stand behind me, or beside me, or anywhere near me, I was out. So, and I'm very loyal to Revere Bank now because they actually took the time to read my business plan and grill me on questions and back me.
So my first line of credit with my first bank was $1 million. Once I joined with United Bank and DISB, United Bank gave me $1 million, and DISB also backed the same amount of money. So that helped us grow our capacity.
So to me, it sort of sounds like having whoever is the person that works for the bank has to understand the program in order for you all to be able to benefit from the program. So that's starters. Right, but sometimes banks tell you no, so we need to find the banks that are creative and understanding enough of these processes so that we can benefit from it. Because if our banks don't, I actually bank with Industrial Bank. Not to throw anybody under the bus, but this program wasn't mentioned to me, and I'm certainly going to try to figure out why.
But there are a lot of banks that don't actually know about the program. Revere Bank did not know about this program until I and someone else brought it to their attention. So they honestly, it's still a relatively new program, and they genuinely might not be aware of it.
I'm going to ask Chris Weaver to talk a little bit about the eligible lenders for the program and kind of the scope and how that works.
So I think I mentioned this earlier, that the process can start with the bank. So if you know about the program, then you can bring it up to any of the eligible lenders. But anyone here, you can always feel free to contact our office and let us help to get the process started as well too. Because we can give the lenders a little bit of nudge and walk them through it. We can't make them give a loan, but we can give all the credit enhancement that we have within our regulations to try to make that process happen.
Good morning, everyone. Just want to mention that the bankers, we are here in the back. I know I'm here. Jeff Banks, United Bank, Industrial Bank, my old bank, is here. We have City First. Any bankers? First National.
First National, and I think
my
Wycliffe.
colleague Joe Laments, and Wycliffe,
Yep.
and is that it? So we're here, and we're looking for deals. We have goals. We want to make loans.
Thank you, Jeff. Oh. Hold on. One of my colleagues is coming around.
It's really a clarifying question. So there's a list of eligible lenders, but you're also saying we can go to any bank. So can you just clarify what you mean by that? So if I have a bank who's not on the eligible lender list, they can then work with someone to become an eligible lender? Is that what you're saying?
So if any FDIC insured institution that wants to participate in the program, then first thing that we'd do is we'd bring them into our program and they would sign a lender participation agreement with us, and then they will be one of our eligible lenders in. So if you have a bank that's not on our list and they're interested in doing a loan with you, send them our way and we can get that process started.
Great. Thank you. Anybody else have any questions? Our experts are going to be here, and our guests are going to be here as well. I'm going to ask our commissioner to come back up and say a few words to close our program.
All right, what a fantastic program, and I dare say huge program. But I really want to thank all our speakers and attendees, and really want to give special thanks to our business owners. I mean, those were some fantastic stories that, again, they say why the program is successful, and I really appreciate you guys coming out. And also want to thank the lenders who came out and the wake up that came out as well, and our sister agencies. Again, we're really, really important. And it's a good question up front, and that's one of the reasons why we're here today out in Ward 8. We want, as the mayor says, we're working in all 8 wards of the city. That's why we're here. And we're also here to promote the program, so we want everybody to know about DC Biz Cap. So excellent question up in the front there. And again, please tell everybody about our program. Also, please take time to fill out the post-program survey so that we can get your input and make sure that these programs are working for you. Also, and again, we're actually be back out in Ward 8 again tomorrow. We're going to be we also work with the deputy mayor for great economic opportunity, and we'll be at her office tomorrow at 2235 Shannon Place, Southeast, from 1 to 3 tomorrow. And we'll be talking about small business insurance, and also, again, talking to people about our small business financing program. So again, that's tomorrow, 1 to 3, with the deputy mayor for great economic opportunity, which again is promoting economic opportunity through all 8 wards of the district. Also, for just more information on our services in general, please feel free to look at our website. Lots of information there. That's disb.dc.gov. Again, that's disb.dc.gov. Or you can still use the old-fashioned telephone and call us at 202-727-8000. Again, that's 202-727-8000. And again, I really want to thank everybody for coming out. And I really want to give big thanks to Kate and her team, Tanya and Idris in the back. And again, without them, this would not have been a success. And again, thanks everybody again. And as I said, it was information packed. Now it's time for the action packed part of the program. So let's get networking with everybody in the room here. We get at least another hour, or however long it takes to get everybody who's looking for financing, connect with the folks who got financing. And how much money do we have, Chris, left to get out?
We have about $1.8 million that we're to put out, and then we're eligible to get another tranche of money from the Treasury, which would be another $4.3 million. But this is a moving target because the dollars are recycling. As loans get repaid, we sweep the money from those accounts and more becomes available. So it's an ongoing process.
So it sounds somewhere about maybe
1.8 in our hands right now that we need to move,
another 4.3.
and then another 4.3 that will be on the way.
Okay, so let's get networking, everybody. Again, thanks for coming out. Thanks again.